What's going on, everybody? It's your boy C-Zar, and we are talking about the S&P 500, the SPX today. Hit that like button, subscribe. Thank you all for being here. I want to give a brief analysis into this. I don't expect this video to last too long, but there's some points that I want to go over because in the little research I've done, or at least the sentiment check that I've done, the pulse check in the markets, it seems as though a lot of people are expecting a crash to happen, and I just want to confirm that that's probably not going to happen. I don't think that we are. I think that actually for the weeks and months to come, we will more or less be moving just like this. I mean, as is pretty typical, you know. I think that we're going to see consistent growth over this year, at least the first part of this year, rather than a massive crash. I don't think that we're anywhere near a moment like this, but it could be. You never know. But let's just go over some indicators to help validate that or invalidate that thought. Hit the like button, subscribe. Let's get into it. Okay, here we are, looking at the fear and greed index for the stock market here. Now, this goes back to 2021. We're not going to reference every single moment here, but you can tell the red line is the stock market. Okay, so the stock market's been growing, moments of decay, moments of growth and decay and growth, whatever. The blue line is the fear and greed index. And the fear and greed index is set on a scale between 0 to 100. Okay? 0 being the most fearful, 100 being extreme greed. And in these moments where we are above this line here, whatever, they decided to give this line some significance, that's like at about a 75. When we're above the 75, we're in levels of extreme greed. Okay? Right now, we're at a very neutral stance. The time that we were here at our prior like cycle high in January of 2022, we had been in extreme greed not but like 2 months before that. And we were in levels of pretty high greed, pretty fair greed at 65 at the moment of the drop, right? We were consolidating, moving sideways for a month before that happened, right? Here, we were overbought, or we were in extreme levels of greed, similar to this, and we had a secondary peak similar to this too, but we did not crash. I mean, we crashed a little bit. Here we crashed a little bit. We saw a little bit of variance here. There were some fears that were going on in the markets. I forget what the relevance was to that time frame there in November. What was the reason for that drop there? But it's not important. I'm sure there's a reason. If you remember it, cool, leave us a comment, let us know. But the point being that we're clearly doing something different here, right? Here we're at higher levels in price now, readings on the S&P, and we're at a neutral stance. People are fearful. The reason why today the S&P is at new all-time highs and we're at a neutral stance is because people are fearful. Whenever we push for all-time highs, typically what we'll see is that you do get into these levels of extreme greed. And then as things taper off, you might diverge on your fear and greed a little bit. Market gets more fearful. We start to drop. Fear goes hand in hand with lower price action. Greed goes hand in hand with higher price action. But right now we're in a very neutral stance. I don't believe that we're going to see a drop because it seems as though a lot of people are expecting an impending crash to happen, and yet we're not really in areas on the fear and greed index that make sense for that. I don't want to focus on that too much because the fear and greed index is not the end all be all, but let's go over some other indicators that may or may not agree with that. We look at the weekly time frame, and there are lower highs here. We do have lower highs. We have lower highs on our RSI, and we have higher highs in the price. That's an indicator, that's an indication called bearish divergence. That typically suggests that yes, there will be a crash coming, or at least some type of correction. This divergence started back here. And whenever we crashed, we actually went below where the divergence started here. Since then, we've been moving up, and what we've actually got here now is higher highs in the RSI. It's lower highs overall, still technically, but we've got higher highs, relatively speaking, now after the crash happened, and higher highs in the price. There's no bearish divergence. This RSI, and who am I to say this? I've just been doing technical analysis for 10 years myself, so this is, coming from a little bit of experience. This RSI looks very, very bullish, my friends. Very incredibly bullish. You're about to get into the overbought zone. The last time, not the last time that you were overbought, but the last time that you got into the overbought zone, not here, this doesn't count, but like actually got into the overbought zone. We look at the price action, and we moved up for 1, 2, 3, had a little sideways week, 4, 5, 6 weeks in a row. We moved up for like a month and a half. I think the next month, and likely the coming months, are going to be very good. They're going to be exceptional, to say the least. It's not going to be a straight line. It's not going to be like this. You know, maybe we move up at this pace more or less. I wouldn't be surprised. Maybe it's a lesser pace, whatever it is. But I do expect maybe it's something in between. I do expect that we'll continue to move up in the stock market, and that probably reflects well in other markets around the world as well. The MACD here is resetting a little bit, cooling off. You've been flipped red now since November, since like the middle of November, the heart of November, and you haven't really done anything but move up. You're building bearish momentum and yet getting higher lows. That's a bullish thing. That's a good thing, you guys. The stochastics are placed in the overbought, and that's a very bullish situation to be in here as well, right? These readings here are very consistent with the growth that we saw between 2023 to the very beginning of 2025. Not consistent with the pullback that we had here, not consistent with the corrective phase that we had there. We had bearish divergence there that continued to build, and we didn't go back to where the divergence started yet. Here we've already gone back to where the divergence started. We've reset. It's totally fine. We look at the daily time frame. Your daily RSI looks like you've got a flat top here with ascending lows. You're ready to break out and go to the overbought zone. That's a bullish thing. You're getting overbought, tremendously overbought, consistently overbought. You're not getting oversold at all. You're living above the 50. You're not living below the 50. You're getting higher lows. This is a very bullish chart, you guys, not a bearish chart. Stochastics look good. The MACD, the oscillators are above the zero, and we found support at the zero. We look so good. We look so good. So if there is a crash, if there's not a crash, who knows, right? Who really knows? Nobody probably woke up on this day, or maybe there were very few people who woke up on this day and said, that's the high. We're going to crash for the next 3 months. Not many people knew it when it happened. It's going to happen at some point, sure. And likely it will be a higher low that then I wouldn't be surprised at all if when we quote unquote crash, if it brought us back to like these readings here. All the people who were waiting for it to crash, you finally got to buy back in at the exact price that we're at now, but you missed the pump initially. I wouldn't be surprised at all if that happens, because that's typically what happens in moments like this. People expect the crash, the price pumps, so then they FOMO, and the price does crash, but it goes back to where they were originally. Like if you just waited, you completed the circle, you would have been fine. But I'm not saying that's what's going to happen. I'm just saying whenever the crash happens, nobody knows, but it likely doesn't happen now. And when I say the crash, I don't mean like COVID. I don't mean like this. I mean maybe like this. I don't mean some calamitous event that ends the world. I just mean, more or less something like this, probably like what we've seen before, maybe even something like this, a smaller scale dump. I don't think that we're going to see any kind of corrective phase like this, at least not for the year of 2026. We're not going to see something like this until maybe 2027, 2028, but probably not even then. It'll probably be later. We'll see. Maybe 2029, 2030. Monthly RSI looks bullish as hell. Imagine all the financial analysts in the world who are screaming from the top of their lungs, there's bearish divergence. There's bearish divergence here. We have a double top. We've got slightly lower highs. And we've got dramatically higher highs here in the price. There's bearish divergence. And all we've done is move up. That's it. And now, if we close the month here or higher, there is no divergence. There never was. It was just an incomplete move, right? It'd be like saying, look, there's bearish divergence right here. Until there wasn't, until we didn't have bearish divergence anymore. It's a very bullish RSI, you guys. It's a very, very bullish monthly RSI. The stochastics are bullish and the MACD is bullish. And there is bearish divergence on the MACD. There is, to be fair. But with everything else that's going on, that one thing doesn't scare me. Statistically speaking, we're going to move up, and that's the expectation. So how high are we going to move? That's a good question. That there is a good question. I don't know if I can confidently answer that, but we can try. You went above the golden ratio here. You didn't really show much respect on it at all. I would expect we do move up to the 2618. We probably don't show much respect there at all. The S&P here at $7,000, or not $7,000. I'm sorry, 7,000 points, whatever it is. It's not a dollar amount. I'm pretty sure it's not a dollar amount. Should be moving up to something around 8,000 points before seeing any kind of significant correction. That's worth noting. And when I say that, I don't mean we're just going to move up nonstop. That's not how it's going to be. It might feel like that. Like right now here, we look at this moment as like we just moved up nonstop, but there were quarter of a year periods where we corrected, quarter of a year periods here that we corrected. You know what I mean? Like it's not just going to be a straight line, but I don't think that we're going to see any kind of serious correction, anything that's more serious than what we experienced in November. What's going on here, man? Anything that's more serious than this from October to November, I don't think we'll see anything like this or more serious until we are at dramatically higher readings. Until the stock, I really do believe we're about to go on a surge throughout the whole damn space, but we'll see. I mean, America, economically speaking, right now, I think is positioned very, very well to do well this year. There's a lot of geopolitical things that are going on and macroeconomic things that are going on that will only benefit the American economy. And if you're not with that, if you don't agree with that, you're probably not paying attention to what's going on in the world right now. Things are lining up and America's coming on top. And I would think that with that on top coming, we are going to continue to rise. And then everybody will be coming all over the place. It'll be phenomenal. Hit the like button, subscribe. Thank you all for being here. I'll see you on the next one. Take care of yourselves. Bye bye.